Joining us now, Renaissance Macro Research Chairman and Head of Technical Research, Jeff deGraaf. Jeff, great to see you.
Thanks.
You've actually been in the bullish camp since November of last year, which I'm sure was a difficult position to take, but you're looking good right now. So you're saying that things still look pretty constructive at this point going into the second half?
Yeah, Melissa, I think we're in pretty good shape. The trends are good. The momentum started to pick up a little bit. We're seeing an improvement in breadth. All those things are important and should be able to propel the S&P to 4,600. I will say I'm a little concerned here recently with the rise in the 10-year yield. If we get that above 4%, I do think that starts to challenge the S&P in terms of alternate cash flows and returns. So that's one area of concern. And then the other is just what we're seeing from seasonality. Historically, the end of this month is kind of the peak for the bullishness from a seasonal perspective, and that then enters into that late third quarter where seasonality tends to be the roughest. So I think we've got a decent little patch here to continue the gains, but we have to keep an eye on those yields because I think that's a potential impediment to the S&P.
How does that yield chart look in and of itself, Jeff?
I mean, if I just take a step back and look at yields from a technical perspective, it looks like they're going higher. So I do have to be mindful and respectful of that. But, is it a disaster? Is it 5% or 6% or, some of the big numbers that are out there? I don't think so. I think it's probably somewhere around 425. But at that level, some of the work that we've done with our yield impact model, et cetera, does start to push against the S&P. So that would be some concern for us.
Yeah, 3.9 this morning is going to take out the June highs. Jeff, some of your RenMax tweets have suggested that the bears are going to need to start pivoting to some degree. What do you think they are thinking as we go into the second half? And do you sort of suspect that we'll see some towel throwing?
Yeah, I mean, we've seen it a little bit, not en masse, but certainly it's been pretty hard. Once you got through 4,200 in terms of levels for the S&P, it was pretty hard to justify the bearish positioning. I know there's an earnings story out there, et cetera, and there's some concern there. But that chart that you had up earlier, I think, is important, which is healthcare. The relative performance of healthcare is very close to making a new relative strength low. That's not something you'd expect to see going into recession. You'd expect it to start making a relative strength high. Over the holiday, we saw that consumer discretionary relative strength actually made a confirming high. So those are pretty atypical of going into recession. And I think the recession bears that are out there have continually had to push that call back. And we think it probably has to be pushed back for at least the remainder of 2023.
Jeff, what's the risk reward at this point? I mean, seeing that yields are a stone's throw away from 4%, and that's sort of the level that could provide some resistance for the S&P 500. What is the upside that you see if we remain on the 10-year yield below 4? And what's the downside if we go above?
Yeah, that's a great question, Melissa. So 4,600 is the upside in our view, and that's if we keep yields below that 4% range. If we start breaking above that, obviously it has an impact on how far those yields go. But if it's within, kind of our guesswork, which is a peak right around 450, then you're talking about 4,200 on the S&P. If we start getting below those numbers and we start to chip away at the identification of that uptrend, and so that would become a problem for us. But I do think we'll pull back. I think that there is a risk to that, but it's still within the context of an uptrend, and that's an important precondition.